Hello everyone. Now, today it is something important which I want to tell you. So, many of my colleagues or even my subscribers or the people who see my video has been asking that how do I invest? So, at least how did I invested or deployed my capital during this so-called dip or market slowdown or the market crash, you can say. Already I have lots of videos now. It's like the or more than 50 videos I have done, on which I have already explained how the economy works, how the concept of stock market is, what are the ratios you need to analyze or evaluate, how to access the management, how to access the or read the annual reports, or even what are the business models and what all things you need to consider while investing in quality stocks. But again, as there was lot of requests on the topic, I will try to share you how I have done my investments during this market crash. As you know, the market has dipped, at least the Indian Nifty had dipped to a levels of 15,500 and below. So many of the quality stocks had gone down. So probably that was some chance for the investors to enter into the market. It is quite natural that you always get such crash or some events based on which the market goes down, and there is always an opportunity for you to invest in. So what I do normally is that I always have a watch list based on my detailed analysis, and watch list of stocks are always being monitored in between, and as and when I get an opportunity, it may not be a macroeconomical event by which the stocks go down. It can be a microeconomical event also, that is something related to a particular company. And once that price goes down, and if I am very clear on the prospects of that company and the future cash flow of that company, then I go invest in that. Already you know the filters like price to earnings, price to book, debt to equity, the capex of the company, the free cash flow, the cash burned by the company, the ROC, the ROE, that is the return on equity. So all these return ratios, the debt levels and such things are screened by me. So as a value investor, I always try to buy the stocks as cheap as possible. So always my first screen will be price to book ratio. So price to book value. So if I get a stock below its book value or somewhat near to the book value, so that is the point wherein I enter the stock if other prospects are good. So I use screeners from various apps. So the screener.com is one of the good apps. Then also for analyzing the ratios, I use the value research. Value research is one of the good sites. Then Trendline, Money Control, all these sites normally I use. Once these ratios are analyzed, I also look into the working capital management. So I have already done videos on working capital, so you can go back and see my playlist and learn from there. So working capital is something important, because if you have a company with even with a good free cash flow, means the operating cash flow minus the capex, the capital expenditure which they spend for acquiring plants and properties. So if the free cash flow also, if it is high, regarding the free cash flow, you already have a video, you can go watch in my playlist. So if the free cash flow is higher, it's a positive thing for the company. Consistent free cash flow, that is also important. But still, if the company have a profit year on year, increase in profit year on year, still some companies will have issue with the working capital management. Means their inventory would be higher and their payables would be lower, means they are unable to sell the products, or they might have sold the product to the customers, the end user, but they are unable to get the money out of them, and they would have already paid the price for the raw materials which are used for producing that finished goods. So they are on a negative side of the working capital. In the sense, they have already paid for their vendors for the raw materials, and they are unable to get the cash out of the customer. So this is a red flag for me. So one is working capital management. So they should have a good cash conversion cycle based on this working capital management. Also, as I always say, I do not go with the analyst or the analyst favorite stocks. So analysts do their good works. There will be reputed analysts. They have their stock list. They have their discretion behind investing in the stocks they tell. So you can always read their reports, gain knowledge out of that, but probably avoid investing in them because they already have a target, and they have many of them are paid by some dark forces. So I will not explain more on that, but end of the day, if you want to make real money or cash flow out of a company, you need to do your own due diligence, and you have to spend time in not only in investing but also in analyzing the stock which you are going to invest in, or in the stock in which you are going to put your hard-earned money. You really need to spend time before you invest in that stock. So analysts will have their own list of companies or their own agenda of increasing the price from X to Y. So you need not care for that. You can read their reports, and if your analysis matches with them, then definitely you can consider that. Otherwise, avoid those lists and select your own stocks based on your understanding of the business and within your circle of competence, and invest in them. So as I told, you should have a watch list of say 10 companies, and you should always see the price at which it is available and try to invest in them whenever they go low. Now the another thing which I always analyze is the management team. So management team should be really dynamic. So they should have a clear understanding of the business. They should have the urge to run the company and increasing the profitability of the company with good ethics and good corporate governance. They should not be dull. So many times I have seen that some PSU companies, not all, they have a dull management wherein they are not concentrated on increasing the profit of the firm. They just want to run the business, and they are not that much bothered about the return ratios. So I always try to see the videos or the interviews of such managements. So always I try to listen to the interviews of the management or the people involved in the management. So maybe in CNBC TV or news channels or in YouTube channels or in various analyst calls, you get to know about the management through their interviews. And also you have these days the earnings call arranged by the company, and you will get the analyst grilling the management, asking about various questions, and the management's capability to answer very clearly to those questions will really give a understanding about the capability of the management. And also it is very important that you hear and spend time. Say management calls or the earnings call can be as high as 1.5 hours also, but you need to listen each and every word told by the management, and also the guidance given by them quarter on quarter. So in the last quarter they have told that in the next quarter they will be doing something. So do ensure that in the next earnings call they tell or talk about the follow-up regarding the earlier point which they had promised or committed in the earlier quarter, say regarding the capex or regarding the profitability or regarding the new division or new product they are launching. So the analyst also would be following up on that question. So you should clearly understand whether they are really promising and they are committed towards what they have mentioned in the earlier call. So this will give you great confidence, and it will help you assess the management quality. Also, it is an added advantage if you know someone working in the company. So you can access the company's performance, or even how the company works, what is the environment, is it productive in nature. Such things you can get from the employees whoever you know in the company, if at all you have some acquaintance. Otherwise it's not a problem. You need not worry. Even you can write to the company secretary or even to the company's investor portal or email, wherein if you have any clarification in the annual report or anything regarding company's prospects, they are bound to reply you. I keep on doing this, emailing them, and I get timely replies also. So those are also important in accessing the company's management and their future plans. Also, try to invest in companies with unique moat or competitive advantage, and also some uniqueness in their product which cannot be simply duplicated by others. So this is one important factor. Promoter holding is another factor. So promoter holding in the sense, what percentage of company stakes is held by the promoters. Say I always prefer above 45 to 50%, and there can be exceptions, so you need to see that. And also, what is the percentage of company promoters pledging. So many times, say for company like J Kumar Infra, though they have some 50-55% stakeholding, half of their stocks, say almost 22%, is pledged. So it's like they have pledged the stock to get some loan or something. So even though it is not that negative, you need to know the rationale behind the pledging. So if the company is debt free or low debt, or they are increasing the revenue and return ratios, then pledging is not an issue. But still, pledging is not such a good thing, so it's a red flag. So you need to look into that. And also another thing is that FII or FPI stake in the company. So are they increasing or decreasing their stake in the company? Which all FII or FPI is invested in the company? So these all things you need to know, because if the FII is keeping on increasing their stakes quarter on quarter, it can be taken as a good thing. Again, if it is a good FII, bad FII, you need to see. There are many cases of money siphoning also through various FII firms. So that is different case. I will be soon releasing a video on that as well, regarding the money laundering through stock market. So that is one case. So you need to know the variation in the percentage holdings of promoter, FII, DII, public, everything, to know the pattern. Again, the type of business, whether it is cyclical, whether it is commodity based. If the crude oil price increases, the stock goes down, or the metal price increases, the stock goes down or goes up. Or cyclical nature, like it is only while rainy season, like in the hot summer season, like a AC business. So it should not be as such cyclical, but if at all cyclical, you should have a investment rationale behind that. So again, that also needs to be analyzed. Another important factor is the post-mortem of the annual reports. So at least last 5 years, or even I would prefer last 10 years, annual reports has to be read, each and every page. So how to analyze the annual reports, already I have mentioned in my earlier video session. You can go and see that. So also the financial statements has to be read, whether they have a strong balance sheet, are there any manipulation. So all these things you need to really read. What is the earnings guidance, what is the future prospects, all these things, though you get from the earnings call, you also need to go through the investor presentation and also the annual reports. Also these days, which is important factor, is getting into, are the company involved in any litigations. This will be mentioned in the annual reports or else in other reports as well, but normally it is mentioned clearly in the annual report, though they give a positive perspective to the litigation, like they are trying to solve the litigation, something like that, but still they are bound to mention if they are involved any litigation, like land parcel selling or any legal issue regarding the land parcel, etc. Also additions to book value, like if there is any litigation regarding the land parcel and that land parcel issue is solved, like in case of Now Bharat Ventures. So they had a litigation and they have cleared the plot sale, which is I think in Africa. So they are now going to sell it. So there is a liquidity problem in selling the land parcel, but still, if they are able to sell that plot, say in next 2-3 years, So that value is going to be added into the book value of the company, and that will add uh, to the investor's pocket. So book value increase already, now Bharat is trading at a low price to book value. So if the book value increases again, it is like adding value to the stock. This is not a stock recommendation, but just to cite an example. Also, you need to analyze the investments by the company. They might have invested in mutual funds, in stocks, bonds, in plots, in commercial properties. So all these things you will get from the annual report. So you need to clearly know where they have invested. They must have invested in various stocks, good stocks. So if the company is not performing, also the investments can fetch them good returns, because the stock they hold will give good returns. So such things also you need to know. So holding company valuation, already I have mentioned. Already I have done a video on that. You can go back to my video session in the playlist. You can see that as well, which will value add to your knowledge. Another thing which I see is the subsidiary companies. So like Tata Chemicals or Grasim has got various subsidiary behind them. So Grasim has got 40% holding in Ultratech. So Ultratech is a good strong cement company, and their earnings is going to Grasim as far as the 40% holding is concerned. Again, Tata Chemicals holds Rallis, then various companies. And again, if you see, another example is Bombay Burma. So Bombay Burma is so much beaten down now, but still they hold 50% stakes in Britannia. So whatever earnings Britannia gets, Britannia is a good FMCG. So as you already know, so the 50% earnings goes to the Bombay Burma books. So again, it is a holding company valuation. So again, you should see the subsidiary companies and what is the quality of earnings by those subsidiaries, which will value add to the mother company. Another thing I always see is the market dominance in some products, like Manali Petrochemical to cite. They have a particular product called polyol. So there are various products which some companies have. Say in Megmani Organics, they export large quantities of pigments. So those are like they are few of the largest players in the world itself, who uniquely manufactures such rare products or rarely available products, and they will have a good market share, and their monopoly remains. And it is not that any competitor can come in and bust up their business, because they have a unique product. So uniqueness of the product and services some company gives also is a filter which I always apply to come into selection of a good stock. Now, what is the percentage of export they do? So like I told, in Make Money Organics, they export good amount of pigments abroad. So there are various companies which have a good export quality, export percentage. So now the dollar is all time high, means the export companies like service provider TCS, Tata Consulting Services, also have a good revenue, because they have exports going to say US or other countries. So the dollar appreciates, means their revenue also increases. Dividend yield is something which I always see. So if you are not going to sell the stock for a long time, but dividends are those things which the stock gives you as a appreciation of holding them for a long term. So dividend yields are also important to be analyzed. Now DCF modeling is something which I always see before entering into a stock. So I do a detailed DCF, discounted cash flow model of that company, about their future earnings growth or their future free cash flow, and discount it to today's date to know what is the future free cash flow. Also, one important thing which I do is forensic auditing. Now this forensic auditing has got a lot of aspects. So I look into the complete fraud doings or any litigations or any ill accounting practices or many things. In forensic auditing, there are a lot of aspects to be seen. So maybe I'll do a separate video on that on a later date. So for now, I check the problems related in a company, and I try to analyze it. So currently speaking, I am sitting on some amount of cash. I have sold off some small caps which has already delivered me good returns, and that I feel that the company management has changed, or there is a change in the economics or the way by which the company works. So I have sold off such stocks, and also majority they are small caps only. And also I have sold off some of my bond funds to liquidate my funds to cash, and also I have some cash. So I'm sitting on some pile of cash, because we never know how we end up getting a good opportunity to invest in some stocks at a lower valuation. So now currently the market is, as I speak, is at the Nifty is at 17,200 around. So though it had gone up to 18,200 levels or something few months back, it is now halfway up. It is like around 17,200. But still, I would say the investing should be based on macroeconomical factors as well. Say some stocks would be at a lower valuation, those are in your watch list, so you may enter those stocks if you feel that it is undervalued. So you may not see the market Nifty is at what level, or the curves or charts or analysis or MACD crossover or something like that. So it is all based on the uh, particular company you are looking at, to which you are interested in investing into. So hope I have covered broadly all the points which I consider while entering into a stock. So maybe I would have missed few of the points. So if at all I remember it, I will again come up with some other video. But broadly, these are all the points which I normally consider while investing into the stock. So I always used to say, or I always say, I consider the stock not as just a stock but as a business. So I enter that business, and after that I consider it as my own. So it is like the business I own is run by some efficient management. So I proudly own that business and try to use their own products only. So that's the emotional part of it. But I really feel proud while I enter a particular company and I really own it. And once I get the dividend or returns out of it, I really consider it as if I am running that business and I am generating good cash flow out of that. So hope this session has been really useful for you to understand how I entered, or how I evaluate a stock and enter at a good price. So hope this session was really helpful to you. See you in the next session. If you like the content, do like and subscribe. Happy investing.